What if your money could save the planet? Green finance is the flow of capital, investments, loans, and bonds directed specifically toward environmental and climate-friendly projects. From solar farms to clean water systems, green finance is reshaping how we fund our future. Green bonds are fixed-income financial instruments specifically used to raise money for climate and environmental projects. In 2025 alone, the global market crossed $1 trillion. Governments, corporations, and banks issue them, and investors fund wind turbines, clean transit, and green buildings. ESG stands for environmental, social, and governance, and it's transforming how investors choose companies. Does the business reduce carbon? Treat workers fairly? Have ethical leadership? ESG investors say yes, and they're winning. Studies show ESG portfolios often match or outperform traditional ones. Carbon credits are permits that represent 1 ton of carbon dioxide reduced or removed from the atmosphere. Companies that exceed their emissions can buy credits from those who have reduced pollution. This creates a financial incentive to go green. It's economics in the service of the environment. The United Nations Sustainable Development Goals are 17 global targets, and finance is the engine to reach them. Clean energy needs investment. Sustainable cities need bonds. Climate action needs capital. Green finance is the bridge between ambition and action. Renewable energy is one of the fastest growing investment sectors on the planet. Solar, wind, hydro, geothermal, and biomass collectively attracted over $500 billion globally in 2025 alone. For investors, clean energy isn't just the future, it's a profitable present. Not all that glitters is green. Greenwashing is when companies or funds falsely market themselves as environmentally friendly without real impact. Vague claims, no third-party verification, and misleading labels are red flags. Smart investors know how to tell the difference. Climate change is no longer just an environmental issue. It's a financial crisis in slow motion. Floods, wildfires, and droughts destroy assets, disrupt supply chains, and cost insurers hundreds of billions. In 2025, climate-related disasters caused $313 billion in losses globally. The financial world is waking up. Did you know your home's energy rating can affect your mortgage rate? Green mortgages offer lower interest rates to homeowners who own or buy energy-efficient properties. A better EPC rating means cheaper borrowing, higher resale value, and lower energy bills. It's a win-win for your wallet and the planet. Impact investing is where financial returns meet genuine social and environmental good. From funding microfinance in Africa to bringing solar power to rural India, impact investors measure success in more than just profit. They ask, what difference did my money make? India is one of the world's most ambitious green finance markets. With a target of 500 gigawatts of renewable energy by 2030, the country is attracting billions in solar, wind, and hydro investments. SEBI has introduced green bond frameworks, and the government is driving EV adoption at scale. Governments and investors now demand that companies be transparent about their environmental and social impact. Sustainability reporting frameworks like SEBI's BRSR, the EU CSRD, and the SEC's climate rules are making green disclosures mandatory. Transparency is becoming the new competitive advantage. Beyond green, there is blue. Blue finance directs capital toward the sustainable use and protection of our oceans. From sustainable fisheries to ocean cleanup technology, blue bonds and investments are protecting marine ecosystems that generate $2.5 trillion in annual economic value. Net zero by 2050 isn't just a climate goal. It's a financial transformation. Banks, asset managers, and corporations worldwide are pledging to align their portfolios with a net zero future. That means phasing out coal, funding EVs, and rebalancing trillions in assets. The clock is ticking. When governments issue green bonds, it sends a powerful signal to markets. Sustainability is a national priority. India raised 16,000 crore rupees through its sovereign green bond program in 2025, joining France, Germany, the UK, and Indonesia in tapping global capital for climate action. The electric vehicle revolution is being powered not just by batteries, but by green finance. From low-interest green auto loans to charging infrastructure bonds, financial products are accelerating the shift to EVs. In 2023, 14 million electric vehicles were sold globally. The road to net zero runs through your driveway. Microfinance is bringing green finance to the grassroots. Small loans of 10,000 to 5 lakh rupees are helping rural entrepreneurs buy solar lanterns, install drip irrigation, start e-cycle fleets, and build biogas plants. These tiny investments add up to massive environmental impact. Not every company can go green overnight. Transition finance provides capital to carbon-intensive industries, coal, oil, steel, to help them shift toward cleaner operations over time. Without this bridge, the energy transition could leave millions unemployed and economies unstable. The world needs $1 trillion per year for this transition. Traditional finance asks, what's the return? Green finance asks, what's the return and what's the impact? From how risk is measured to how success is reported, green finance operates on a broader scorecard. Same money, different mission. Understanding the difference is the first step to becoming a smarter, more responsible investor. The future of green finance is arriving faster than you think. Artificial intelligence is scoring ESG impact in real time. Blockchain is tokenizing carbon credits. Climate fintech apps are putting green investing in everyone's pocket. And nature-based solutions are becoming a new asset class. The next decade of finance will be green, digital, and global. Stay ahead with Account Finance with Raavi.
Subscribe to Account Finance with Raavi for finance and accounting insights.